Hi everyone, I'm Lorenzo Di Mattia, manager of Hedge Invest Sibilla Macro Fund. I wanted to tell you what we have done in October and give you the outlook for the rest of the year. October was a positive month. We made about 72 basis points net for the investor. We entered the month long. We believe that the S&P will be in a trading range between 3,200 and 3,600 more or less. And it got near the bottom of the range. We bought what we liked at the time, the alternative energy space, the precious metal group, and selected tech stocks and internet stocks. The book was very profitable in the first half. We left something on the ground in the second half as precious metals suffered a sharp correction, which by the way recovered in November, and then we were able to sell at better prices most of the book. Important events, recent events are obviously the US elections. Biden won with a split Congress. The Senate will be still in the hands of Republicans. This translates in positive and negatives. The positives are that there won't be any tax increase probably, especially the capital gain tax that would have hurt the winners like tech and momentum stocks, and corporate tax as well probably won't go up. On the negative side, the stimulus will probably be smaller than expected, but the other big news, which is a game changer, is the data on vaccine by Pfizer, which is a lot better than expected. And more importantly, the data has been more advanced than expected, because Pfizer was supposed to come out with the interim data, but they skipped that and they came out with the more final data, which included a much larger sample. So we're much closer to a successful vaccine now, and efficacy of 90% over a large sample, almost 100,000 people, is significant. So the reopening trades, stocks that are exposed to reopening 100%, leaders of sectors that suffered with the virus, but where there have been massive bankruptcies in the sector, where the competitive landscape has changed, and the leaders are basically the only companies left in the sector, will, together with cost cutting has been very aggressive, will allow these companies to make much more money than they have made pre-virus once things get back to normal. We are talking about even 50% more in earnings versus 2019 for the leaders in sectors that have been decimated and where bankruptcies have been the highest. Retailers, hotels, for example, restaurants, restaurant chains, gyms. So the leaders in the sectors, the largest companies in the sector, will benefit tremendously from this in the long run. People will start focusing on earnings in 2022. And so we are left with, now that we can assume with reasonable certainty that the return to normality 100% will be possible within a year or so, we can start thinking about earnings in 2022. And once people start to focus on that, they will, and they're already starting doing it, tech stocks and momentum stocks, which were the only one growing this year, while the rest of the economy and companies were having like earning declines from 20% to 50, 60%. Many companies lost money as well. You'll find growth in cyclical stocks in the leaders of sectors that have been decimated, with earnings growth of 50% and more in the next 2 years, and sustainable growth rates will be also higher than pre-virus times because of pricing power. Bottom line, between buying cyclicals at cheap valuations and tech at much higher valuations, once you get the growth in the cyclicals, it will be a no-brainer to switch. And that's what's been happening in the last couple of days. We believe this time, as opposed to prior, this move is sustainable. There will be bumps on the road because the virus is still here. The states are seeing really increasing cases and deaths and hospitalization. So in the states in particular, it's going to get worse before it gets better. But still, with this efficacy in the vaccine, we believe that the market will look ahead and focus on earnings in 2022. We're playing this, we're positioned for this. We will keep increasing reopening trades, aerospace, hotels, restaurant chains, even airlines, selected airlines, and banks as well benefit from this. We sold precious metals. We still have some equities in the precious metal groups, which we probably plan to sell. Selected tech will do well, but we are extremely light there, and we don't plan to add there. Nasdaq will underperform for the first time in years, probably for at least a year. And we still like the alternative energy sector. So it has suffered a bit recently because all momentum stocks suffered, but this is unrelated to virus and it's a trend that will last for many years. So we will continue to focus there. We expect rates to go a little higher, although central banks will be dovish for a while longer as unemployment is very high. And the dollar will be moderately weak. We don't expect very big move there. Thank you very much.